Hello guys, welcome to the Nexoel Trading Hub YouTube channel. It has been a long time since we carried out weekly Forex focus in the YouTube channel. So we are back with our weekly Forex focus for the coming week. And I would like to let the community know that we apologize for the mix-up in the mentorship price and how that has actually been reviewed. So if you're interested in the exclusive Forex mentorship, you can check the description to this Forex focus so that you can actually apply for that. We actually have limited slots available for this year. For the coming year, the mentorship fee is actually going to return to its original price. So guys, this is the dollar index and this is the weekly time frame. So what we can see from the weekly time frame is that we're still seeing a bullish momentum in the dollar index, and we're seeing that price is being drawn to this buy side liquidity and this other extreme buy side liquidity. Because above this buy side liquidity, you can see we have this inefficient price delivery. So we could see more bullish move of price in the dollar index. And what we can see here is price actually pushed to the upside here. We have this inversion fair value gap in the weekly time frame and this fair value gap, which we anticipated reaction of price to have a bearish move. But what we can see, price broke through the fair value gap and the inversion fair value gap, took out this buy side liquidity. When we actually go to the monthly time frame, what you're going to see is that price is reacting at this monthly order block, and we can see prices reacting at the 50% of that order block. So we can see that prices are expecting the mean threshold, but we are expecting to see that price will take out the buy side liquidity because you can see we have this inefficiency here. So we believe this is actually our drawn liquidity, this buy side liquidity, this other internal range buy side liquidity. So we can see the reaction of price at the mean threshold of the bearish order block. So let's get back to the 1 week time frame. So here in the weekly time frame, what we can see is that price is reacting at this fair value gap. And in confluence to the bearish order block mean threshold we identify from the monthly time frame. And now what we can see is that this fair value gap becomes an inversion fair value gap. Now we can see how price went through the fair value gap and then price took out this buy side liquidity. Price retested the fair value gap as an inversion fair value gap. Price reacting now at this fair value gap and the mean threshold of the monthly time frame bearish order block. So I'm still expecting bullish move of price in the dollar index. So let's actually drop to the daily time frame. So here in the daily time frame, what we can see is that this fair value gap becomes an inversion fair value gap. We can see how within this fair value gap in the daily time frame, which is the weekly fair value gap, we can see that price created this sell candle before the bullish move to the upside. Now what we can see is that price returned to retest the fair value gap as an inversion fair value gap. And then we have this bullish impulsive move of price to the upside. Now we identify from the monthly time frame that this is the mean threshold of our bearish order block, and this is a fair value gap in the weekly time frame. Now we can see how price is facing rejection within this sponsorship zones. So I'm expecting to see in the coming week that we have the fall of price to the downside, price react at the bullish order block, and then we have the bullish continuation of price to the upside, because we're looking forward to see that price will take out this buy side liquidity. So these are actually our buy side liquidity. We have this relatively equal high points. So these are our buy side liquidity and the draw on liquidity. We're expecting price to actually rate the buy side liquidity. So since we're seeing that prices are expecting the mean threshold of the monthly bearish order block, I'm expecting to see that price will fall to the downside, mitigates the bullish order block, fill up this fair value gap, and then we have the push of price to the upside. Except price takes out this swing low points, then we can consider that the dollar index is now bearish, but we are still in a bullish condition for the dollar index. So let's check out the 4-hour time frame. So here in the 4-hour time frame, we can see the monthly mean threshold of our bearish order block and the fair value gap we identified from the weekly time frame. And what we can see is that now price fell to the downside, price returned. Price is reacting at this order block. So we're expecting to see that price falls to the downside because you can see we actually have this liquidity void here. So we want to see price falls to the downside. Price may fill up this liquidity void, and then we have bullish continuation to the upside because we have our buy side liquidity that we're anticipating to see that price will raid. So except price takes out this low point where we have a valid break of this low point, then we can consider a shift in market structure, and then we can begin to frame bearish move of price to this weekly inversion fair value gap. So guys, this is what I have to show us in the dollar index. So guys, let's check out the Euro USD pair. So this is Euro USD, guys, and this is the weekly time frame. Now, what we can see in the Euro USD, if you guys have been following the forecast, how we actually captured all this bullish move in our forecast, and we expected to see how price will raid this buy side liquidity, but then we can see that price gave us bearish move of price to the downside. Now, what we can see is that we have this internal sell side liquidity as our draw on liquidity. So we're seeing price falling to the downside since we're seeing bullish move in the dollar index. Now, what we can see is that price took out this sponsorship zone. Now, because this sponsorship zone actually sponsored the bullish move that took out this high points here. Now we can see price fell to the downside, closed below the swing low of this institutional order flow. And now we can see that price returned to retest the order block. And now price gave us this bearish momentum to the downside. So this is our draw on liquidity, our internal sell side liquidity. So for the Euro USD, I'm anticipating to see further bearish move of price to the downside. So I'm anticipating to see that price will further push to the downside to take out the sell side liquidity, and in extension we have this other sell side liquidity. So until we see that the DXY actually breaks the swing low we identified, then we can begin to consider that the Euro USD would actually become bullish. But we are still expecting bearish momentum to the downside in the Euro USD to take out our internal sell side liquidity. Price took out this swing low point. We have a valid candle closing below the swing low point, and then we have price retesting the order block. So you can see we have this push, price close below the volume of the order block, price return to retest, and then further push to the downside. Price grab this liquidity and then give us a down close wick. So we have our draw on liquidity, this low and this low. So let's check the daily time frame. Here in the daily time frame, we can see this bearish trend line. So we have the push of price to the upside. In confluence, we can see that the order block we identify in the weekly time frame, we have this fair value gap, which is now an inversion fair value gap. We can see how price returned to retest the inversion fair value gap. Then we have this fall of price to the downside. So I'm expecting to see that price would push to the upside. What we can see is price reacting at this consolidation zone. So we could see price push to the upside to return to the main threshold of this inversion fair value gap. In confluence, we have this order block, and we can also consider this as our breaker block because we have the push of price pull back to the downside, took out this bullish candle low, price push to the upside. We have the fall, and then price took out this low. So this is the bearish candle that sponsored this bullish movement that took out liquidity, and now price fell to the downside. So we could see the push of price into the zone, and then we have the continuation of bearish move of price to the downside to take out this relatively equal lows, this liquidity, and in extension we also have this other sell side liquidity. So let's check out the 4-hour time frame. In the 4-hour time frame, we can see the bearish push of price to the downside. So we can see how price broke structure here. We can see we have price gap liquidity resting here. Now, what we can see is we have in confidence to this fair value gap, we have this inversion fair value gap. So this is a valid inversion fair value gap because it took out this buy side liquidity. So price may not necessarily return to the extreme point of interest. Price may actually push further to the upside into the inversion fair value gap in confidence with this fair value gap. And you can see we have the mean threshold of the weekly fair value gap we identify, which is now an inversion fair value gap. So we could see the push of price to this price level and then price continue the movement to the downside. So until price takes out this swing high points, we are actually still in a bearish movement of price to the downside in the Euro USD also. So this is what I have to show us guys in the Euro USD. So let's check the USDJPY pair. So guys, this is the USDJPY pair. So since we're expecting a bullish move in the dollar index, so we should possibly still also expect that in the USDJPY, since we have the USD as the base currency in this particular pair. What we can see is that price took out this fair value gap. Price closed above the fair value gap. Price is reacting at this sponsorship zone that Mansouri Sapari will call the double Marabozo. So what we can see is the bullish move to the upside, price for the push to the upside, reacting at the double Marabozo candlestick. I believe when we should drop to the daily time frame, we could see an institutional order flow zone here. So I'm still expecting to see further push of price to the upside in the USDJPY pair because we have this fair value gap resting here. So let's actually mark out that inefficiency. So we have this fair value gap. So we could see price further push to fill up this fair value gap. But before that, we can see the possibility of price falling to the downside before we have the push to the upside. So let's check the daily time frame. So here in the daily time frame, if you can vividly remember during the forecast we've been doing 2 weeks ago and subsequent weeks, we actually identified this particular institutional order flow where it told us to anticipate to see the fall of price from that particular zone, which is the double Marabozo candlestick zone based on the weekly time frame. Now we can see how price returned to it and how price fell, but then price did not continue the movement to the downside, and we can see how we have this impulsive bullish candle to the upside. So this is now our draw on liquidity. So I'm anticipating to see further push of price. So we could see price dip lower to the mean threshold of this inversion fair value gap since we have this order block resting here. Or price may still just dip lower to respect the mean threshold of this order block, and then we have the continuation of price to the upside. So I'm still expecting more bullish move because we have fair value gap above here. We have this fair value gap also. So let's check the 4-hour time frame. In the 4-hour time frame, we can see we have this bullish movements of price to the upside. Price gave us this impulsive move. Price returned to the downside. So we can see further push of price to the downside to this last down close candle before the bullish move of price to the upside. Or we could actually see that price is going to take out this low, mitigate the mean threshold, and then we have the push of price further to the upside. Price takes out this swing high point, which is the buy side liquidity. So guys, this is what I have to show us in the USD JPY pair. So let's check out the USDCHF pair. So guys, this is USDCHF pair. This is the weekly time frame. I'm not really going into deep details in this focus. So what we can see here is that price took out this buy side liquidity, the swing high points, we've been anticipating to see that price will read out this sell side liquidity where we saw this price range, but then price pushed to the upside, gave us a bullish. So I told us to anticipate to see that price may return to retest the fair value gap. There's an inversion fair value gap and for the push to the upside. So what we can see, we have this inversion fair value gap. This is a valid inversion fair value gap because it took out this buy side liquidity. So we can see also the institutional order flow in confluence the inversion fair value gap, but then price pushed to the downside and then broke through the inversion fair value gap and the swing low points. So I'm anticipating to see further bullish move into this price zone before we can consider price taking out the buy side liquidity. So for the coming week, we're looking forward to seeing more bullish move, though we could see price fall to the downside to possibly mitigate this bullish candle before we have the further push of price to the upside. So let's check the daily time frame. Here in the daily time frame, what we can see is slightly above this inversion fair value gap we identify in the weekly time frame. We can see we have this unmitigated institutional order flow zone slightly below it. So we could see further push of price into this zone. So I'm anticipating to see the fall of price. Price mitigates this breakup because this is the last bullish move before this bearish move that took out this. So I want to see price falls to the downside. We have the breakout, we have the fair value gap before we have the bullish continuation to the upside. So this is the first zone before price really targets more deeply into the inversion fair value gap we identify in the weekly time frame. So let's check the 4-hour time frame. So here in the 4-hour time frame, we can also see that the daily institutional order flow, we can also see order flow in the 4-hour unmitigated order flow. So we could see price falls to the downside in confluence to the breakout block identified in the daily time frame. We can see we have this inversion fair value gap in the 4-hour time frame in confluence to this fair value gap. We have a valid inversion fair value gap because this took out this low point. Price pushed to the upside, reached the fair value gap, now an inversion fair value gap. So our anticipation is to see the possibility that price drops into the zone before we have the bullish continuation to the upside. So this is what I have to show us, guys, in the USDCHF pair. So let's check out the gold pair. This is gold and this is the weekly time frame. Last week, I projected to see more bearish move of price to the downside when I actually identified this rejection candle. I saw the fair value gap and wanted to see price fuse up this fair value gap. So what we can see is that we have this sell side liquidity and then we have this weekly fair value gap. So price is being drawn to the sell side liquidity because we have this price imbalance. Gold is actually bullish. Gold has created an all-time high. So any form of a bearish move we're anticipating to take in gold, we actually have to define those zones with more confluences before we take the bearish move. Since we're anticipating to see that the dollar index gives us more bullish. So let's check the daily time frame. So here in the daily time frame, what we can see is identify this daily inversion fair value in confluence to this fair value. I saw how price rejected to the downside. So I anticipated for the bearish move last week to the downside. You can see the charts shared on the screen. So we can see how price fell to the downside into this order block. And now we are having price push to the upside. So I'm anticipating to see for the fall of price to the downside into this weekly fair value gap. And in confluence, we have this institutional order flow zone. So what I'm anticipating is to see the possibility of price pushing further to the upside into this buy candle because we have this fair value gap and then we have price push to the downside, take out this sell side liquidity into the weekly fair value gap. but we really have to wait to see price delivery because price is extremely bullish in the gold pair. So let's check the 4-hour time frame. In the 4-hour time frame, what we can see is the change in market character. We have this market structure shift. Price created this high, return, took out liquidity, price pushed further to the upside. Now price fell to the downside and then took out this low. We can see this candle body closing below this swing low point. So I'm anticipating to see first, if price continues bullish, I want to see price return to mitigate this fair value gap. So this is the up close candle before the bearish move that took out this low point. I want to see price return and then price push to the upside. Either price return to this price zone here, and then we have the fall of price to the downside in the gold pair, or we could see price falls to the downside. We have the push of price into this fair value gap. Price takes out this liquidity, and then we have price falls to the downside, or we could see price takes out this high points. So this is what I'm just anticipating to see also in the gold pair. And if you actually want to join the gold membership, where you're going to have access to chat setups, and you can also check the description to this video and also join the gold membership. So cheers guys, so we'll see you next week or in the next video.